Danielle, with the 30-year and the 10-year moving higher, 30-year mortgage rates are sticky. Do housing prices need to come down at this point, and by how much?
Yeah, I think when you look at the market, we've seen very slow sales pace, as you highlighted. The challenge is particularly acute on the existing side. New home sales have fared a little bit better, but not much. I think we see that builders have been able to buy mortgage rates down for some of their clients, and that has made a difference for some builders. We just had some research out that shows that buyers of new homes have seen a 0.5 point lower mortgage rate over the last year. So getting down into that 6% range really seems to make a big difference for a lot of buyers in the market today. If we don't see mortgage rates adjust, as you mentioned, we're seeing them move in the opposite direction. I think we are going to need to see home prices soften a bit. And only time is going to tell exactly how much. It's probably going to vary throughout the country already. Mm-hmm. We're seeing some different price performances when we take a look at the different regions across the country.
I mean, I heard 30% today from our Bloomberg Intelligence analyst, that 30% home drop for prices. Is that realistic, you think?
That certainly would probably bring home prices and the cost of a mortgage back in line with long-run affordability numbers. But given the lack of building that we've seen over the last decade, I don't think that's a realistic decline number that we're likely to see. You look at today's homeowners, and in aggregate, they're looking at close to record levels of home equity. Most homeowners are in a very good position, and they don't necessarily have to sell. And so if home prices were to fall, that might cause inventory to seize up even more.
Is there any sort of real significant difference, Danielle, in what you're seeing between the existing home market, used homes, as we would call them back in the day, and new home sales?
Yeah, so what we've seen over the last year or so is that when mortgage rates move up, so mortgage rates have kind of waffled in the 6 to 7% range over the last year or so. And when mortgage rates are closer to that 7% mark, new homes tend to outperform. And as mortgage rates move back towards the low 6% range, we see existing home sales pick up a little bit. So we see existing home sales pick up, I think, because we have more home owners get into the market and decide to sell. It makes more sense for them because they're often turning around and buying a home. So they experience the market both as a seller and often as a buyer. And so we see inventory pick up a little bit, and then we also see that buyer demand pick up. When mortgage rates move higher, I think that's when builders and their ability to offer incentives like mortgage rate buydowns really have an edge in the housing market. So we are seeing different trends in the new and existing market. Some of that is, like I said, these competitive advantages that builders have and can offer. Another piece of that is probably also the regional trends. We see a lot more building in the South and also the Mountain West. And so that also affects the different regional performance that we see.
And as far as those building trends, we're going to get the building permits data as well tomorrow. So, I know the narrative is always that that's such a long-term measure. The idea that builders aren't really thinking about what's happening now or even what's happening next year. It's more about what the market looks like in 5-10 years. Is that an accurate way to think about it?
Yeah, I think building permits on the single family side of the ledger is probably 2 years or so down the road because that's their way of planning for the future and making sure that they're taking out the permits that they need to move now. It takes much less time to build a single family home than it does multifamily home. And so the lead time on a single family permit is shorter than on a multifamily permit, which takes longer to construct. But I think your point is right that permits give an idea of the general sense of the market, and then starts tell us a little bit more about how builders are reacting to what they're seeing on the ground right now. And builders have had a lot of challenges to deal with, not just the lack of affordability for home buyers challenging their margins, but also the broader policy environment has been pretty tough over the last few months.
And also, hasn't inventory been getting a little bit better? So you have inventory getting a little bit better, rates are still really high, and builders still have to give concessions.
Yeah, inventory has been improving. I think it highlights how low we were. So today's existing home sales data showed that month supply, we're at a 4.4 month supply, which is the highest that it's been in some time. But economists typically think of 4 to 6 months as a balanced market. If we look at the annual figures, the last time we were in this balanced market territory was all the way back in 2016. So it feels like a very different market than we have been in most of the rest of the last decade. But it's really just the housing market getting back to a place of balance that it hasn't been in for the better part of almost 10 years.
Right. And then you add on the rates issue and the affordability issue, and it's really hard to see how that balance right sizes itself. What about the older population in terms of being sticky and staying in their homes as well? What is that doing to the market?
Well, they're a significant contributor to the fact that we do have home equity at record high levels. So older households are more likely to own their homes outright, or if they do have a mortgage balance, it's more likely to be a smaller mortgage balance. So that makes them a little bit less sensitive to mortgage rates, and they were an important part of the home buying universe over the last couple years. But now some of that has played out. They are still enjoying those, those equity benefits, but then they are also experiencing the homeownership cost side of the ledger with rising property taxes and rising insurance costs. And what that is likely to evolve over time. We are likely to see those households age out or choose to downsize, but in many cases, they're not downsizing in this market because it's hard to actually downsize and find yourself in a smaller footprint home that actually is a better move financially. So the cost might be similar. And so a lot of them are choosing to stay put. But as far as how that evolves over the long run, I do expect we're going to see those boomers kind of become a smaller share of homeowners in the market. But it's probably not going to be something that happens quickly. That's going to be more of a gradual process, is my expectation.